All right, what's up, YouTube? So I know my title is Ask for Their Return Percentage. So when you're following any promoter or anybody dealing with stocks, just ask to see their 1 year percentage return because we want to verify that they're actually, doing pretty good in the market. And that is not measured by dollar amount, that is measured by percentage amount. So to put it into, somewhat perspective, let's say if a guy is working with $1 million account. If he makes $50 a day, is he really being efficient with his money? So you see how easy it is to get caught up in the dollar amount instead of the percentage return. The percentage return will tell the true story. The dollar amount will, it'll just tell you how much they made. It really doesn't tell you how much they made relative to their account. So we must ask for the percentage return. I know a lot of people don't. A lot of these quote unquote successful traders, they really don't produce their returns. They don't show their returns. The only thing they are showing is that the dollar amount or how much they did make. So we want to focus on percentage returns rather than the dollar. And that's how we have to look at it. So please don't get caught up in the money that you do see. We want to get caught up in the percentage return because that is the most important out of trading. We want to make sure that that person is actually, doubling their money, tripling their money, like they say that they are. So once again, if a person is saying that they're making $500 a day, $700 a day, let's see what that is relative to their account. So if I'm making $700 a day with $1 million account, am I really making money here? No. If I'm making $5 a day with a $50,000 account, am I making money here? No. So we want to focus on a percentage return because that percentage return might tell the true story that people don't want them to see. So remember, we want to press for that percentage return. If they cannot produce that percentage return, we start to get sketchy, and that's when you should, kind of raise a red flag to maybe stop following that person, or, it should hurt their credibility, somewhat because they cannot produce their returns, because it might be in something, there might be something there that they don't want you to see. So let me go ahead and screen share my screen here before we get started. Okay, so as you know, the market is down today, but I'm definitely going to explain to you why the market is down. So we see that the Dow Jones Industrial is definitely down, and typically that is because of, let me go ahead and show you, it's because of two stocks. We have Johnson & Johnson reported this morning, they didn't do so hot, and then we have Goldman Sachs, and that's pretty much contributing to most of the Dow Jones losses right now. But this is something to pay attention to. We see right here, check the RSI. We're almost at oversold level. We see what happens when we become oversold. J&J definitely rallied throughout this Trump rally, and I was waiting for a good price to get in. This might be a good price to go ahead and snag some shares here and definitely ride it back up on the wave. 120 will probably be the support here, but as we see here, there's a large bar piercing through support, so that might be really support that was pierced through here. So we're going to go ahead and plot 120 as the support level here. We're going to make a fake support level here, and we're going to see if that's going to hold. Can't really call it fake because we did see, it had trouble right here, tried it right here, and then after that pierced through that resistance level, and now we might be knocking back down at support levels. So if you pay attention to Netflix, you see exactly why it went down. It was up pre-market, after market, but really what happened here is that investors and traders started to say, okay, this growth model is definitely flawed. If you did not pay attention to the conference call, definitely read up on it and understand why the stock ran down and why it spiked up and why it went down. But mostly it's down on the day, and we need to understand why it's down. So let me go ahead and go to Goldman Sachs. So Goldman Sachs, you already see, I have the support and resistance lines plotted here. So as we see, I plotted them out pretty perfect. We see that 220 was definitely support. We broke through support with a gap down, and now we're gapping down to more support. So we might see support at this 215 level. Right now we're at 216. We opened the market around 220. So we're piercing through support levels, and we might see it go all the way down to 210, maybe 208. But if we're looking at a long-term perspective, if you really are bullish on the banks, now is the time for you to go ahead and buy. This was, quote unquote, the rare miss for Goldman Sachs to miss on their earnings. So if you understand what the word rare means, that means they hardly miss their earnings. So this might set you up for a really good trade. If we get back to this 215 level or this 255 level, you've done almost about $20+ a share. So if you can't afford to play Goldman Sachs for long term, this is definitely something you want to be aware of. Let's check out the XLF, because financials and healthcare is what's lagging today in the market. So we see the financials. We see it's getting back at that support level. So if something happens and we pierce through that support level, we go lower. We might hit this 2202 level. Let's see what that is. So we see about support and resistance right here, 2202, and we see support right here, 2246. But we really want to be aware of all support and resistance levels when we do trade stocks. So let's not get that confused with people buying at random prices. No, we don't want to buy at random prices. We want to buy at prices that's going to make us the most profit, or that's going to maximize our profits, not give us a 50-50 shot at maximizing profits. We want to have a 100% shot of maximizing profits, and following the RSI, daily moving average. All of these things will definitely keep you in the loop to maximize your gains. So right now we see that the XLF definitely lagging. We see Wynn Resorts. Wynn Resorts almost try 120, but as you see, it got knocked back down. And typically that's what happens. Like I said, 120 handle can't hold. We go lower, and we might use that short-term $30 increment, or we might use a $10 increment, or we might use a $5 increment. But for right now, we check at 119. We bounced at let's see right here. We bounced around 112-ish, and now we're up about $2 a share. But that's only on the bounce. We might be going lower here, and heavy support right here at this 110 level. So remember, we must pay attention to all support and resistance. And if you have a question, go ahead and ask me, and I'll answer it. But for right now, let's check and see how my trades are doing. I know I'm bullish on the market right now. The market is down, so let's go ahead and see how those are doing. Let's see if it loads here. Okay. So we see the XIV, the UVIX. Okay, that's I'm getting. You have to stay in the loop. This is Seeking Alpha that's going off. And typically what that is just the app that keeps you up to date with every single stock that you do list that you want to keep up to date. It keeps you up to date with all of those stocks. So we see the market getting checked down again, and you see it's down $600 on a day, and I'm down on all positions. We see what happened to the penny stock. Remember, I reported on the penny stock. Let's see what happened here. Remember, we said it was promoted. This is the reason why we got a position in. Let's see. Excuse me. So we see that 0.0001 is now the price, and we see that it keeps bouncing up and down. We hardly see any volume coming in for the stock, and we definitely want to be aware of those when we play these 000 or these sub-zero plays. Like I said, these are definitely dangerous because the volume leaves in and out of the stock, and not a lot of people actually do play these stocks. So I'm bullish on all these stocks here. Bullish on oil, bullish on Berkshire Hathaway, bullish on Ford Motor. They're definitely going to bounce up, but it definitely moves in a small increment. But let's see, Lululemon. Once the market gets out of its funk, we definitely will start to see more returns. But for right now, they're all losses. So let's see if we can trade something here and see if we can open up a trade right now. And also, I'm thinking about starting my $1,000 challenge early with just $970. I might deposit some funds so that way we can jump straight into $1,000 because I really don't have time to go in and out of trading because of school. So let's see if we can get a trade here. So we see CUDA. This is a 1-year chart. Let's see if we can look at it from a 5-day. We see, okay, we're down right here. Okay, let's go ahead and buy some shares right here. We're going to do some live action trading right here. So we see CUDA is definitely down. And we're going to go ahead and put in a market order. Remember, market orders definitely put you in a couple shares ahead of the price. So we're going to see, not a couple shares, but it puts you at, a crazy amount. So let's see. Okay, my order was not accepted. Let's go ahead and see if I can buy, 200 shares. Let's see, market. So now we're starting to see CUDA take off. So okay, I'm okay. I don't understand what the heck is going on. I just got filled at $19.50. So I know simulated trading is not the best way to trade, but this definitely gives you some kind of perspective in the market. Let me see. I don't understand why the heck would I be okay? Because the current price is at $19.50. So for right now, it's 15 minutes delayed. So we see delayed data. Yeah, it's delayed about 20 minutes, which really sucks because you can't really get that perfect trade going here. And I wanted to give you guys a really perfect trade, but everything is just about running up. And we see here, Barracuda Networks. Let's check out this right here. They reported their earnings. Let's see what they did. They reported, oh, they're pretty good. They did really good. We see earnings. What is this? Why is the stock down over 17%? We see the stock estimate of 4 cents, but they actually did 19 cents. And that is definitely really good. So let's see. What was the cost for that? I'm not really sure. So this is what we have to make sure, because this is definitely trading at a discount, because they have a blowout quarter. And I know this was a recent IPO. Let's see here. Okay, so we see Barracuda reported its fourth quarter earnings slipped to 3.2 million from 3.24 million. Okay, so we understand why the stock definitely slipped. We see revenue rose, and yeah, so this is definitely trading at a discount. So if you guys want to jump into the stock, this is definitely a pretty good price to get in on this. This is amazing. I mean, usually I don't focus on stocks that are below $20, but I'm definitely going to put this on my watch list. Barracuda is definitely trading at a discount. We see what's going on here. I might open up a actual trade on my Robinhood account, but just not right now. We're gonna wait. I sold all my long-term positions, so we're definitely gonna ride the oversold levels, and we're gonna keep playing those and see what happens. But as you see here, Barracuda Networks is definitely trading at a discount, and we must pay attention to that. So we see 1885 support, and we see this gap to start filling is at $21. So we see it traded at a $21 discount, and after that we go back into filling the gap. So as we see here, the stock, let's see if it fills gaps here. We see a small gap fill right there. We see, yeah, okay, so the stock definitely does fill gaps. So we see a gap up. Okay, so this is a stock that definitely moves on gaps. So we see a gap up here, we see a gap up down, and then we see another gap up, and then we keep trading, then we see another gap up, and the gap is filled right here, and then we see a gap down. So definitely pay attention to all these gap ups in stocks that you are trading. You want to be well aware of what's going on with the stocks that you're trading. So go ahead and put Barracuda Networks on your watch list. This is a stock to watch, because I think it might, I'm thinking it might get back to $23, 23, or this sideways trading range it was trading at for a while. So let's say 23 to 22. So we have a gap to fill right here. Let me go ahead and take that off. We have a gap to fill, so we have remove price level 1, and we're gonna remove, let's see, remove drawing. Okay, so we see a gap to fill right here, and this is still trading at a discount, but we want to make sure that all the sellers are gone, and we're gonna start to see bullish sentiment from the stock. So what that takes is 3 days. I know people, they go off these 3 days. So if a stock does get hit and you really want to buy it, people tend to wait 3 days before they jump into the name. So the stock may break through $20, and after that, it might go lower and go back at 19. So this might keep trading, but I wouldn't suggest jumping into it right now. But if this was a trade for you, definitely go ahead and jump in. As we see, the stock is definitely climbing back up. As we see on real time, you can go to Yahoo Finance, That's definitely how I found one. Found the stock down 17%. Definitely trading at a discount. And now we're back at night. Okay, so the stock is definitely back at 1933. So as we see, down about $4. So this stock is moving pretty good. So we want to pay attention to stocks like this. So I'm glad we were able to catch this real time. So Barracuda Networks, revenues, profits did slip a bit according to last year, but we see revenue increase and we see a really good beat. So pay attention to that. Let's see something else here. Let's see what else is a top loser. We have Wins Finance Holdings. I know we have penny stocks as well. Let's check out those. A lot of people are interested in penny stocks. They're still interested in building short-term wealth instead of long-term wealth. So I'm not sure why everybody wants to do that. But you see, you missed your opportunity. You see, when stocks trade this choppy, there's not enough volume going on. So pay attention to that. If you see this chart that moves just like this, there's not enough volume going on. And as we see, there's a 9-cent spread right here. Definitely dangerous. And we see a 7-cent spread on the downside. That's definitely another dangerous side to trading these crappy companies. Let's see. CBLI. Okay, we see that it dipped. But let's go back and monitor the trade that I do have open. Let's see, Barracuda Networks, CUDA. Okay, so we're down about $12. Fill price is at $19.50. So let's see, CUDA Networks. And I'm not sure what the heck that is, but we see CUDA definitely take a really good bounce here. So if you definitely missed out on this trade, there are going to be more. So typically, I'm not going to trade any crappy penny stocks. We're definitely going to look for quality names that are selling off. So as we see for a 1-year level, we see the long-term move is definitely to the downside. But as we see here, what happens when the stock becomes oversold? We see that it bounces in Barracuda Network. So we do see the RSI is definitely painting us a really good picture. So pay attention to the RSI. We see huge dips. So when RSI is telling us that a lot of sellers are happening, that typically becomes I would say a judgment call that you have to make. So if a stock is getting sold hard, let's check out this one right here. If a stock is getting sold hard, right, you think it's going to bounce, but in reality, right, it keeps selling off because it's only measuring the amount of sellers coming in relative to buyers. So we cannot get confused that the RSI is going to definitely mean the stocks are going to bounce all the time. We see that Palo Alto Networks was oversold for just about a month, and the stock continued to slide down. So that lets us know that the RSI is definitely showing us where the sellers are and where the buyers are relative to, to how the stock moves. So you see a lot of sell orders come in for Palo Alto Networks, and we know exactly why. We see Cisco, take their customers and, other things such as that. But we see that the RSI has failed us. If we follow RSI heavily, we see that the RSI has failed us. So we must make judgment calls on our market knowledge, and doing our homework. That's something that we must do every single time. So we see a dip at 107, and as you see, the RSI showed us that it was oversold at about 115, 112. So a lot of people might have got in, they might have said, okay, this is the price it's going to bounce from. And as you see, it's trading down just about for a whole 4 weeks. So we must be careful when we use the RSI because we know that the RSI does not paint a perfect picture for us all the time. And we must do our homework every single time. There's not one time, you could be successful trading these blue chip stocks, without doing your homework, because we want to make sure who's going to come in to buy Palo Alto Networks, right? We always think of, okay, the sellers are coming, there's going to be buyers, but you need to think, who's going to come in and buy this, this company's stock? The company did not issue a buyback. CEO did not buy any stock here. So who's coming in to buying the stock? You don't see any investment firms coming in to buy the stock. So it's basically put on the retail investors and traders to pump up the stock. So we see that Palo Alto Networks has had really good recoveries. We see it fill in the gaps, But right now, we cannot see that Palo Alto Networks is going to fill in this gap. So we see it trade down for about 2 months, as you see right here. Last year, traded down about 2 months. This might be the same pattern going on for Palo Alto Networks, and it just fills the gap. But for right now, there's nobody actually coming in here and buying the stock. So we see another cut right here. Palo Alto Networks cut to sector perform from outperform. So a lot of people are seeing negative headwinds come to this stock, and not a lot of people are buying it. So we really can't trust the RSI all the time, but we want to pay attention to what the RSI is showing us relative to volume and relative to what the stock price is trading at. All right, so let's check this out. Barracuda, down only 5. So Barracuda Network, I mean, this is definitely a really good company. I'm really surprised that, okay, I'm definitely gonna put this on my watch list right now. We see it traded a 5-cent spread, and that's really not, that's really not important here. But when you're looking for quality names, this is definitely one that you want to be in, or one that you want to be watching out for, right? We want to look out for the cybersecurity stocks. We want to look out for, the technology stocks. We want to look for all of those stocks. And what will make it even more better is that if it's trading at a discount, we know that from RSI, from what the chart is telling us, is that the stock bounces, and when it does bounce, it fills in the gaps. So we have about, let's zoom back in here. We have about about $1 to $2 to fill in the gap here, and we go back to regular trading levels. So we see a really outstanding beat. So let's hope that, the stock does rebound, but I'm really not hoping that the stock runs up to 20, before I'm actually able to get some shares here. But I really want to check, I really want to go ahead and scoop up some shares here, but I'm not able to since I'm trading on the T3 account. So that means I have to wait 3 days until my money does settle. So I did place a trade on Thursday. I placed a couple trades on Thursday, so my money doesn't settle until Wednesday. Yeah, Wednesday. Okay, so Wednesday. Okay, so I'll probably show you guys an actual trade. I'll actually show you guys me placing a order here, and I'm gonna show you how easy it is to place an order on Robinhood. It's definitely a put in the number of shares, swipe up type of deal. So, like I said, we want to pay attention to what the stocks are doing. We want to pay attention to patterns. We want to do our homework, and we want to always plot our support, resistance, and we want to pay attention to that trend line. So I hope this thing knocks back down to 1885 lower levels. So I'm definitely getting kind of bearish on the stock because I really want to get in on a good position on the stock. And, there's not really that many sellers coming in and dumping the stock. We see the chalk and oscillators definitely letting us know. We see that, people are still wanting to buy this name. There's no real overreaction here to the stock. So let's just keep paying attention to that model. I'm still not understanding what the heck is this. This is my option buying power. This is like double. I'm not really sure what the heck that is, but it has doubled. Every time I keep checking on it, keeps doubling. So let's check out gold before we go. Oh, what a surprise. Gold is still falling. Ooh. All right, so we see gold is definitely overbought. It might have took a break here and there, but as we see, the market is kind of, trading in a funk. So due to Goldman Sachs, due to Johnson & Johnson, the market is kind of down. So people are still trying to, they're still wondering, should we go ahead and take in, some gold? Now, this is where it starts to get really interesting. If you're paying attention to Forex, right, we see those Forex traders that are actually trading and so-called making money, ask to see their percentage return. And also what we have to pay attention to is that these brokers for the Forex is that your money is not, your money is not insured. If you see FDIC, SPIC, you want to have your money insured up to $200 something thousand. I think it's $250,000 is what the regulation is. So just in case the broker does go under and goes out of business, your money is insured up to $250,000. So we want to make sure that we're trading with a credible broker. We want to make sure that we're trading with a insured broker. So if we, if you cannot find that in your broker, it's definitely time for you to go ahead and get your money out while you can before something happens. But we want to make sure that brokers are always having the, that accreditation to them, so that way, just in case something happens to your money, you have you have another way to pull it out. So when I bring up forex is that there's an election coming up, and I suggest you read on the election. I'll probably talk about it after the election is over, but there's an election coming up, and people are starting to price that in their heads. So whatever happens internationally or overseas, it definitely might have some negative effects in this market. So gold might trade up again due to fears internationally with the election. So some people are hoping that it's not a type of election where what we had in America, where people thought Hillary Clinton was going to win because of the pollings, but when people actually came out to vote, Trump actually won. And people are thinking that might happen overseas. So if that doesn't, if that has any negative headwinds, that definitely will carry back over to the U.S. market, and we definitely don't want that. So that's typically what people are still buying gold for. But for right now, I'm definitely still short on gold because it's only a safety trade, and once the market continues to run higher, that's when gold will fall back down. So let's check out this one. This is the last stock I'll talk about. So let's see here. $200 stock. What happened? What did they report? The conference call is going on right now. Let's see, what was their report? Okay, they actually missed their earnings. So as we see right here, we can definitely go through every single call, every single earnings miss, and what we have to look for is a discount in shares. So if we see that the outlook, we want to pay attention to the outlook for the let's see. We want to pay attention to the outlook for the year. So if the company can issue out good outlook, that's definitely good. So we see the company's previous 27. Okay, so if the company issues out good good guidance, really bullish guidance, that's typically a time. Okay, we see that it's oversold. Come on, we see that the stock is definitely oversold. It might be time for people to definitely jump in and scoop up some shares. Come on, like we see that earnings is definitely opening up different buying opportunities. And I'm definitely going to put this on my watch list as well. So we see earnings has opened up different buying opportunities. So this is exactly why I'm selling some of my long-term positions, because, when these opportunities do come, I want to be able to, take advantage of them. So we see that we have a gap to fill. $200 was the bottom, and we see that 220 is the gap to fill, 221 is the gap to fill, and let's hope that the stock can actually get back up. But as we see right here, 14-month low, stock is definitely oversold. And we're going to, we have to ask ourselves, who is going to go ahead and buy this stock? A lot of investors and a lot of traders. And also, okay, so here we go. Let's see. So we see that it's lowered its guidance, right? It lowered its guidance. So this definitely might go lower. So we, like I said, we want to look for a company that's going to issue out good guidance. So this stock is definitely going to get hit even more. So we see that resistance level. Okay, resistance levels are right here, 202. We see resistance levels was broken, or support levels was broken at the $200 level. Let's go back 3 years and see where the stock was trading. Okay, we see that the stock, definitely has those type of days, but Jesus, look at that. Down days, the whole time, down months actually. And the company stock is definitely getting, hit left and right. Wow. So $200 is the bottom right here. So if this definitely does hold, if it doesn't hold $200, we might see the 195, or we might see 197, somewhere around that support level. But we want to pay attention to that. So let's see how Facebook is doing, because I don't know if you guys have noticed there was a murder on Facebook that was captured, and Mark Zuckerberg is going to have to come out here and answer for that. But I'm going to check out Snapchat because it's a quote-unquote goodbye. We see it's up about 3%. A lot of people are saying if it gets below IPO price or at IPO price, they're going to go ahead and buy shares. But we're definitely going to keep we're definitely going to keep seeing the stock trade up and down. There's no earnings, there's no official news. The stock is definitely this company here is a horrible company. I do use the app, but at the same time, this is definitely not a stock you want to be in. You want to make sure you're finding growth. So we're going to wait on Twilio's quarter to come through, and we're definitely going to report that. So we see Twilio's definitely building up for that growth that they're expected to see in the upcoming quarter of earnings. So stocks move like this. They move up on expectations, and once those expectations are beat, and they're beat really good, the stock soars higher. And that's typically what Twilio will have, what will happen to Twilio. But we must see a really good beat for the quarter for that stock to actually rally and go higher and continue to go higher. So that's all I have for you guys. Pay attention to current events. Make sure you're watching out for historical facts that CNBC does put out, because it really does help you. Also, we're looking for stocks that are oversold. We definitely just found about 3 different stocks that are oversold. So we cannot use this excuse and say, penny stocks are the way to go, when seriously you have these stocks that move on high volume, that you have the ability to take your money in and out rather than being pressed against you really using having to hold the stock for months and months and times in, because you cannot get out. I might go ahead and show my old broker. I keep the picture and I keep the account open to understand why I don't trade penny stocks, because I'm still in positions now where I can't get out. And a lot of people don't show that because, a lot of people, quote unquote, have started with a lot of money, and they haven't really had a reason to trade those type of stocks. But, a lot of retail investors really don't have that much money. And like I said, we get caught up in the dollar amount that people post. We need to stress that they need to post their percentage returns. So that's all I have for you guys. Take care.